What's good, everybody? It's Jordan. Come back at you with another video. So for this video, I'm going to be doing a recap breakdown of Tuesday, July 28, 2026. So on this day, I did not take a trade, and I understand there's going to be some people that once they hear that I didn't take a trade, they're going to click away from this video. I still want you to watch this video if you care about learning how to become a better trader, right? I still recommend you watch the video in its entirety because I'm going to give you a lot of important and beneficial information, right? So I was behind the charts on this day. It's just an opportunity didn't present itself and it didn't materialize, so there was nothing for me to do, right? And that is the discipline and the patience you need to have as a trader. So jumping right in, right, before we do anything, we always look at Forex Factory for any news, right? And on Tuesday, July 28th, we do not have any news, right? So there's nothing for us to worry about really on this day, right? No red folders, right? So I have a pretty clean trading day on this day. So now the first step on the charts is that we determine higher time frame bias, right? So previously we had a high on the S&P and then it eventually makes a low. So this is the lowest low and it was formed with this being the last high, and obviously price is still within this range. So at least right now for the S&P we are bearish. Now if we look at the Nas, the previous swing point we had was up here, this low. This was a swing low and it was cleared with this level, and then price obviously took off all the way down. So you have a low right here, and this low was traded under with this low here. So prior to this lowest low, right, this candle right here, this was the most recent swing prior to the low. So clearly price did not trade through any of these levels here. So we are still bearish, right? So we are approaching this day with a bearish bias. Jumping in on the 15-minute time frame, right? We will now, right, a 15-minute time frame, we now mark the previous swing high, right? And now it's going to serve as our liquidity pool, right? Our point of interest. So if we look at this gold candle is from 8:15 to 8:30. Now, of course, this next candle overtakes it, right? So this obviously wouldn't serve as a high. So it's anything before this high that's higher than this high, right? So if we look at where my cursor is, if we look to the left, where is the most obvious 15-minute swing high prior to this high here? Of course, your eyes would probably gravitate directly to this high, right? This is the most immediate. Now, of course, this high happened yesterday, right? But this is the most immediate 15-minute swing high that is available that did not get cleared, right? Right? You see everything else like this, all these levels are still lower, so these were already cleared. So it's just this is the only high, right? So that's where we mark our target, and then we do our liquidity pool, right? Like our profit targets, right? And these are the obvious lows that go lower, right? So at bare minimum, right, we're looking at the S&P. This is our trade idea that is beginning to form, right? We want to see price go up here, clear this high and this liquidity before going down and taking out all these targets, because we are indeed bearish. Now, same idea for the Nas, right? This candle here is the 8:15 to 8:30, but the candle to the right of it blows past it, so we can't use this as the swing point. So now the next most obvious swing point is this high right here. This is the buy side liquidity that we're working with, and now we going to mark the targets if we were to take price lower, right? So you have these two levels which are really close, and then we can look to the left. I can go on the higher time frame and look for even further targets, but I'm not going to, because once again I didn't take a trade on this day, right? So no need to go too hard on the setup. So now at this point we can jump into the 1-minute time frame and see what's going on. So remember, right, we have our liquidity pools. These are the point of interest that we want to see price purge before, right? We want to see price go up and then be able to take a sell and go down, right? So it is 8:45, so we'll see what happens with price. Boom, right? So you're seeing this is the 8:47 candle. You see price spikes it, right? And this is how you know that this is the game that price is playing, because look at this, right? All of these candles are all normal candles, and then immediately the moment price gets close to the liquidity, boom, an aggressive candle spikes all the way up. And if you notice, price closes right under this level here. So you're seeing that these highs are areas of interest for price. This is where price wants to travel to, right? These events don't happen by accident. It's just that price is engineered to go after liquidity, right? After 8:30, the reason why 8:30 is important because after 8:30, that is where the hunt begins, the hunt for liquidity, and price clearly came and wicked liquidity and is hunting after it, right? So now at this point, right, you see liquidity get taken. So now I would do array and market and say that I'm waiting for another push up. Why? Because if we're bearish on price after 9:30, I typically want to see price make the high of the session, because if price is able to make the high of the session, right, I want to see price make another push up after 9:30, so then I can sell it from the very top, because you want to buy low and sell high and vice versa. You want to sell high to then buy it back at a lower price. So if price made this wick, I want to see after 9:30, I want to see the new high get formed. And for the NAS, right? NAS, we still don't do anything because NAS still has not entered our point of interest. Now we're just watching price, right? Just to see what happens. Okay, we're just steadily watching price. And you can see with S&P, price is making its way back up, but it still has not cleared the high. So there's still nothing for us to do, right? And now for the NAS, you're seeing price is effectively consolidating in this space, is just moving sideways. And now if we continue watching price, right? You're seeing NAS beginning to slowly make its way down because it's starting to go through structure and it's getting close to clearing these levels here. Now, remember, if I'm bearish on price, I want to see price make the high of the session. Now, if you pay attention, this is the low of the session, right? This brown represents the New York London crossover. So this is the low of the session, right? And if I'm bearish, I do not want to see price make the low of the session. I want it to make the high to go lower. I do not want price to go lower because then I don't want to trade at this level. I want to trade above the liquidity or high up, right? Same idea with the S&P, right? This low here is the low of the session, so you can use that as a profit target. I don't want to see prices go down and make the low of the session before clearing the high, right? So we're getting close to 9:30, and as you can see, price is going down, right? So next candle is 9:30. And boom, as you can see with the 9:30 candle, with the 9:30 candle, this 9:30 candle makes the low of the session because this was previously the low of New York, and price clearly goes under it. So to me, no longer interested in the S&P because, like, what you need to remember is you want like you want not only price to go up here so that you can trade it lower, but you also want these levels to remain intact, because then there's reason for price to want to go down and take out these levels, right? If each of these levels all got taken out with this move and then price were to make its way up and then go down, it won't be as desirable, because you need to think of trading as being a game of probability, right? If the targets are taken already, then it's less probable for price to want to make its way back down because the liquidity was already taken, right? So once I see price make the low of the session when I'm bearish, I'm out. And the same idea here with the NAS, right? This bearish candle right here, this is in fact the 9:30 open. As you can see, the 9:30 open went under this low right here, which was previously the low of the session. So because price made a low for both pairs, I'm out on both pairs. So literally, if you watch the trading video from yesterday as well, a similar phenomena happened where a few minutes after 9:30, I walked away from the charts. And this was another day where I just walked away because I don't want to chase price when it's already made the lows, right? As you can see, after I fast forward, seeing that price does in fact go all the way down. It clears the low of the session. It clears these other intermediate lows. It clears the London lows. And then you're seeing the low of the day, right? Because midnight open is right here, and so this is the low of the day, and price came and cleared that before then finally reversing. So you see that happening, and you see the same idea with the NAS, right? NAS did not clear our buy side liquidity. However, price just came down and it absolutely obliterated the London lows and the low of the day before then reversing back up. But of course, I stepped away from the chart, so there was nothing for me to do. But you're seeing after price takes the liquidity that it wants, it can in fact reverse and begin going the other way because it did its job, right? It took out the targets. So this was, a rather quick trading day and trading session because I didn't do anything. And this is the importance, right? The importance is one, knowing when to trade and knowing when not to trade. Now, this is the day, of course, where I didn't trade because liquidity was not taken after 9:30, right? Price never made the high, and price never came above this level, so there was nothing for me to do for the S&P. For the Nas, price never went up to clear the buy side liquidity, and price just absolutely tanked and made the low of the session for both pairs and grabbed the target. So because I'm bearish and price took out all the targets, there's absolutely nothing for me to do. There's no reason for me to stay behind the charts. There's no reason for me to, try to hope or chase out the price. And I wasn't going to, try to buy price after liquidity was taken because I'm bearish on the higher time frame. So I'm only going to trade in alignment with my bias. I'm not going to trade any counter trend trade because that is going to reduce the probability that it's going to succeed, and it's going to, you know, reduce potentially like how much price wants to move. Because what if price doesn't want to reverse? What if price wants to continue going lower, right? Me taking a counter trend trade is less probable to work out, which is why I will avoid doing that, right? I'm going to stick with my bias. Now, once again, this is another perfect example of traders who might think that market structure alone is the answer, and I'm here to tell you that it's not, because once again, you have more evidence of price, being bearish, right? Like you see a bearish move down, then you start seeing price start climbing its way up. And now a lot of traders, when they see something like this, they think this is a market structure shift, right? They think that this push up, because they cleared a previous high, that price is now bullish, and so they'll try to take a buy, right? Maybe from this low, right? Because you have the high here, and then prior to this high, right, you probably have the low here. So there's a lot of traders who probably looked at this and told themselves, oh, there's a gap right here, price is bullish, so let me buy, stop loss above the low, and then targeting this high. But the problem with that is price was never bullish, price was always bearish. So that's why price aggressively went down, and if you took a trade, you would have been in the wrong side of the market, and then you would have taken a loss, right? So I'm showing you guys these examples even on days where I didn't take a trade, to show you guys that this is the game that's being played, right? You see liquidity being taken before price begins going down, and this is a phenomenon that's always going to repeat, right? This is what screws up a lot of traders, because so many traders think that price moves because of support and resistance, right? Think about all the traders that looked at this, right, and thought that this is resistance, right? Because they see price, tapping this level so many times, so they're selling. And then these other traders, right, that they go short and they put their stop loss above resistance, thinking that this is gonna hold, right, targeting the lows. And then they were clearly taken out with this push right here before price did in fact, go lower, right? And it's because price does this on purpose, because price is after orders. And if price, let me zoom in on the S&P, right? And if price is able to go above previous highs, right, it does that for an obvious reason. It does that because it wants to activate, and I'll take this out for now, right? It does that because it wants to activate sells buy stops, right? Well, this level here is a lot of buy stops, because traders think that if price were to go past an old high, that it is going to continue. That is a market structure shift to go higher. So traders have buy stops here, but when price goes above this level, what it's doing is activating all the buy stops, right? So a lot of traders are buying, right? Buy orders get flooded in the markets, which is the perfect counterpart for price to sell. So when price is going above this level, it is in fact selling. This is why after you see this push above, you see this aggressive move down with all these bearish candles, right? And where does price go? Price just magically decides to go after the intermediate lows, the lows of London, and it clears the low of the day. So this move here, right, this aggressive move down ends up making the low of the day. This is the lowest point in price before then price actually reversed, right? So you're seeing how this this entire move right here, right? You're seeing how this is all one, like this is all one leg of price. This is all manufactured. This is all manipulation, right? You see how price is slowly moving up because it's slowly accumulating buy orders, right? Because traders are seeing this move up and they're buying, thinking price is gonna buy. And then what else you have, right? You have traders who they see this level and they consider this level to be resistance, right? And so there's traders who are going to be selling. They're going to put their stop loss a little bit above this level and then they're going to get wicked out right here, right? But there's other traders here who are buying, right? Because they have their buy stop orders above this high, but also they're buying because think about other traders, right? There's traders who trade breakouts. This wick used to be an actual body. It used to be a full body candle. So traders would see this full body candle forming and think that price is breaking out. So they're buying early because they want to catch the move up, only for that to be a false breakout to then go lower, right? This is all done purposely. This is all engineered. This is all manipulation. This is all a machine and algorithm. It's all controlling it. It's doing this on purpose. You need to understand that trading is a wealth transfer. Trading is a wealth transfer, which transfers wealth from the people who are impatient and the people who are just unknowledgeable. They're just unaware of this phenomena, and it transfers it to those who are patient and those who are knowledgeable, right? The ones who understand what's going on in the game that's being played, right? It's stealing money from all these traders who are trading retail logic, and then it's allowing the smart money traders to be able to capitalize and win, right? Once again, the only reason why I did not enter a trade is because this move happened around 8:45. It didn't happen between 9:30 and 11. By the time price hit 9:30, price was already over here. And then immediately price took off and cleared, all of these targets. So there's literally nothing for me to do. But just because a trade did not materialize for me and I didn't take a trade, that doesn't mean my strategy is broken, because once again, when you determine your higher time frame bias, that is 80% of the work. You've done 80% of the work. And clearly, right, because I was bearish on my higher time frame bias, if price gave me an opportunity to take a trade, I would have been on the right side of the market, and then I would have been able to ride this wave and capitalize on all of this, right? You see it clear as day. And so this is the power with trading a strategy that has sound logic, and it has to be a strategy that is rooted in liquidity and rooted in orders. It needs to have logic because the market was created to make money, right? The reality is, and this might sound harsh, but it's true, right? The reality is that the world is controlled by greed. The world is controlled by people who love money and want money. These markets were created to make money, right? And think about governments, right? It's like governments are always taxing people. Anytime anyone makes a dollar, the government is going to take its piece, right? So in a market where billions, if not trillions of dollars are being passed through each and every day, you think that is truly going to be a free flowing market, that money is going to be freely flowing, right? It's not. Right? It's not. The people who control the markets are going to be the people who are going to profit from it. And this is the game that's being played, right? These people push price above these levels, right, to activate buy orders so that they can sell at the best price. This is them selling at a premium. So then they can ride price all the way down. And what do they do when they get to the bottom, right? Let me highlight it for you guys. Under here, what do they do here? They buy it back, right? So they sell up here, which is a premium, right? They're selling at this point. When this happens, this is the high of the session, right? If you look at the brown, let me rewind a little more, right? If you look at the brown, this is the high of New York. They activate the buy side order so that they can sell. So they're selling at the peak of the move, at the very top of the move, and then they're closing their position, or in other words, buying it back at the very bottom. Why? Because there's sell stops down here, sell stops, right? Traders have sell stops under these levels, because they're anticipating that if price goes under this level, that it is now bearish, right? They're expecting structure breaks. So expecting price is going to, if price goes on this level, that it's going to continue going lower. But price went up here to sell, and then it went down here to then buy. And then as you can see, right after all of the sell side liquidity was activated, you've seen that price eventually decided to reverse and go back up. So this is what's happening with price. And once again, unless you begin noticing it and seeing this as the game that's being played, that trading is just a game about pairing orders, and that price, once you identify the bias, the overall direction in price, once you understand that, then you can begin capitalizing on it and trading in alignment with price. Because if price gave me this setup right up here, I would have took the trade from, probably not at this high, but probably some, probably in an area over here is when I would have looked for an entry. Then I would have entered here, and then I would have sold here, I would have sold here, I would have sold here, and then got out at the same area as the machine, right? The algorithm that's moving price, right? The game is rigged. It is all manipulated. It is meant to beat most traders. That's why in trading, 90% of traders lose 90% of the money within the first 90 days because of this manipulation, right? That most traders are oblivious to, that this system beats most traders, so this system is always going to exist forever. And if you don't understand this, you are most likely going to continue getting burned by it until you do. So I'm showing you this so that you can begin seeing this game that's being played, seeing trading as a game of liquidity and orders, right? So that you can begin thinking in alignment with this logic and begin trading and capitalizing on it, right? So I know most of the time was spent on the S&P, but that's pretty much where most of the logic is, right? As you can see with the Nas never came up here, and then price, kind of hovered around this area and then completely, just blasted lower. So that's the whole idea on this trading day, right? So that rest of the video. Enjoy the video, leave a like and subscribe as you're on the road to a million subscriber, guys. So once again, it's Joel, and I'm out. I'll see you guys for the next video.